Hi, and welcome back to FX Open's Market Weekly Update. Now, in today's video, we'll review the key developments that moved markets recently and look ahead to several important economic releases, including the US inflation report and Canada's labour market data, both of which could influence currency and equity markets in the coming days. Well, over the past few days, global markets have reacted sharply to escalating geopolitical tensions in the Middle East. It's the headline for just about everything. A military operation launched by the United States and Israel against Iran, followed by retaliatory attacks from Iran targeting Israel, and several Gulf states hosting US military bases, triggered strong reactions across the financial markets. Oil prices surged, driven by concerns about potential supply disruptions, focusing on the Strait of Hormuz, and at the same time, global stock indices declined across the United States, Europe, and the Asia-Pacific region. The US dollar, however, did gain some momentum. Market participants are now watching the situation closely. Key questions remain about how long the conflict may last and what impact it could have on sectors such as energy and tourism. I'm sure we've all got our eyes glued to the latest news. As of the 5th of March, tensions remain elevated and the outlook remains very uncertain. As a result, volatility across global markets may stay high in the near term, so don't forget your risk management techniques. Okay, now it's time to start looking ahead, and traders will be closely watching the US inflation report scheduled for release on the 11th of March at 3:30 p.m. GMT +3. Now, the US dollar has recently recovered amid those geopolitical uncertainties we spoke about. Although the upcoming economic data won't impact the long-term trend, it could still generate some short-term volatility. In January, the annual inflation rate slowed to 2.4%, the lowest level since May, and slightly below expectations. The moderation was largely driven by base effects as higher readings from the previous years dropped out of the annual calculation. Now, core inflation, which excludes food and energy prices, eased to 2.5%, the lowest since March 2021. On a monthly basis, consumer prices increased by 0.2%, easing from what we saw in December and pace then. Core prices were the only component that accelerated compared with the previous month. This softer inflation trend strengthened expectations that the Federal Reserve may eventually move towards rate cuts, so the US dollar was supported in the short term. The Fed's next policy decision will be announced on the 18th of March, and according to the CME FedWatch tool, markets currently expect no change in interest rates. Even so, the upcoming inflation report could trigger some of that short-term volatility. If inflation continues to slow, the US dollar may weaken, while equity indices such as the S&P 500 could receive some additional support. Now, another key release for traders will come from Canada. The country's unemployment rate report will be published on the 13th of March at 3:30 p.m. GMT +3. Now, Canada's unemployment rate fell to 6.5% in January. That's the lowest level in 16 months. However, total employment declined by around 25,000 jobs, which was significantly below expectations for some small, modest growth. Most of the weakness came from the manufacturing sector. This decline was partly linked to the sector's exposure to US tariffs on Canadian exports, and we know there's been a raft of changes there. Now, although the unemployment rate declined, the drop in employment suggests that the labour market remains uneven. Following that release, the Canadian dollar briefly weakened before stabilising. The upcoming report is unlikely to change the Bank of Canada's interest rate decision on the 18th of March, where rates are widely expected to remain unchanged. However, the release could still trigger some short-term volatility in CAD pairs. If unemployment falls and employment rises, the Canadian dollar may strengthen. Go back to the US now, and on the 13th of March at 3:30 p.m. GMT +3, several important US indicators will be released at the same time. Now, these include the PCE price index, personal income, personal spending, durable goods orders, and the second estimate of US GDP growth. Now, the PCE price index is particularly important for traders as it's the Federal Reserve's preferred measure of inflation. Meanwhile, income and spending data provide insight into consumer activity, while durable goods orders help track business investment trends. Because several key indicators will be published simultaneously, USD pairs may experience increased short-term volatility as traders assess and digest the overall signals from the data. Well, in conclusion, overall, the combination of geopolitical developments and important economic releases could keep that market volatility elevated in the days ahead. Traders will be closely watching how inflation data, labour market signals and broader economic indicators shape expectations for future central bank policy. Obviously, the geopolitical concerns with Iran are going to be in the forefront of everybody's minds as well. Well, for real-time updates and deeper market insights, visit the news and analysis section on the FX Open website, where you can find the latest market coverage and trading ideas. As ever, we wish you luck with your trading the week ahead. Thanks for watching. Bye for now.